Is there anything else that I think that sticks out to you about tax laws right now that are in flux that might change soon, or things that you've got your eye on?
Well, the one actually that sticks out that I think we are going to see is I do think we're going to see the research and development tax credit be changed back to the way it was. So for those of you who don't know, in 2017, in Trump's tax bill, they actually eliminated the ability to both write off your research and development costs and take a research and development tax credit. Okay. You either got the full credit and had to amortize, or you got the full deduction and didn't get the credit. So what they're working on right now is they're trying to find a bill. And they think they've got a couple of bills that they can do this with. They're trying to find a bill to attach this to where they've got bipartisan support, which they need, obviously, and will be able to pass, really correct this back to the way it used to be, which is the way we need it to be, which is you get to deduct your R&D expenses and you get the tax credit. Because otherwise we're on such an uneven footing with the rest of the world that it really puts us at a disadvantage from technology.
How does, so I've never actually R&D credits in any sort of way. And can you give us an example of how like a small business, like, mom and pop thing, and we're not talking about anything scientific or whatever. How would you apply R&D to a typical small business?
I'll give you two examples. One is you might be in an industry that is ripe for technology development, and you decided we're going to develop the technology. So you go out and you actually build software to handle a service issue, basically, that was being done by hand, and now you think you can do it better with computer equipment. Right. Mm-hmm. through an app or through software, really through a software. And that's one case where the R&D credit is absolutely available. And that's pretty clear. Another one is you might have developed, one of your advantages might be that you have processes that you use that your competitors don't have. Well, developing those processes, as long as there's some scientific or engineering aspect to it, can actually qualify for research and development tax credit. So I do think there are a lot more small businesses that qualify for the R&D credit than small businesses that might not otherwise think they qualify might actually qualify.
Interesting. One other thing I want to talk about is there any changes in the estate tax laws?
Not yet.
Okay.
And we've had no changes. There are lots of threats, but no changes. I honestly don't think we've got a split government right now. So I don't think we're going to see anything before 2025. Yeah. It does phase out. By the way, this $12 million, $24 million exclusion does phase out. It reverts back to the old, basically half of that.
When?
2026 or 2027. I never can keep my years straight
there. Okay.
But it's one of those 2 years. Okay. And then it reverts back. So I do think people should still be paying attention to it, because you want to use up that exclusion when you know it's there, because it's not likely to get better, right? There's still this big, there's still a lot of discussion about tax the rich. The rich don't pay enough tax. Biden's still after doing that. We've got the new IRS auditors that are going after wealthy individuals. So, we still have to pay really close attention to it. It's not something that I think, I do think it's going to be a fight when that does come up in a few years. I think it's going to be a knockdown, drag out fight between the parties.
How about in terms of the various, trusts? Like, there was some talk a while back about, currently, the estate tax is referred to by some as the dumb tax or the stupid tax, because essentially because essentially the way to potentially, and again, I'm not a tax or legal authority, but just, from my understanding is, okay, just get it out of your estate. What does that mean? It means basically having irrevocable trust, that maybe you're still ultimately managing, but It's not, you don't own it anymore. And that's really what you need to do, although you're paying the tax on that. And so the question, I guess there was some question a year or two ago, as I recall, there was some people bringing up this idea that if you're paying the tax on that still, then, it shouldn't really be, it should be part of your estate.
Right. But they didn't pass any of that. So none of that got passed. We're still safe on that. This is what a lot of estate planners have done over the years is they say, well, we want you to still be taxed on because that gets even more money out of your estate.
Yep.
Now, you don't have to be, right? I mean, either the trust can be taxed on it or your kids, your beneficiaries could be taxed on it. You get to choose on that, but you still get to choose. So that has not changed. You're right. There have been a lot of proposals. Remember, we've had a wealth tax proposal. We've had wealth tax proposals recently by several of the high tax states, and none of that has happened. And none of it likely will happen in the next few years. But remember, there is a downside to getting it out of your estate, because when you get it out of your estate, you don't get the basis step up at death. So that means that you don't want to get more out of your estate than you have to.
Yes.
And this is the challenge. And this is why people are wondering, what do I do? And so because if it's going to go back to 6 million, I want to get the 12 million out, right? I want to make sure that I'm covered. But if it's going to stay at 12 million, I don't want to get the 12 million out. I want to get everything over 12 million out, right? Because the 12 million, I want to get the basis step up because I'm not going to have any estate tax anyway. So right now, is the time to actually set up trusts. You don't have to fund them right now. And I think that's actually the hard work is getting the trust set up the way you want them to. It takes a lot of attorney time. It takes a lot of your time and your spouse's time. And it's worthwhile doing, even if you only fund a few $1 million for now. And then later on, if they're going to change it, and you see that that there's discussion about this, then fund it heavily. But you're not going to be able to make all those changes. If everybody's clamoring for the estate planning attorneys, your chances of getting it done at that point are pretty low. So I would start doing it right now.
So when you're transferring over that money to a trust currently, is there a maximum amount that you can give to that trust? Or is that not really an issue?
Yeah, right now it's $12 million.
Okay, so it's the same as, got it. So it's 12, oh, that's right, 12 or 20. So it's basically so that's where you've got that whole dilemma. Like if you have too much money, you get zeroed out on the basis, but but then you're going to have a huge potential problem for your kids because they'll probably have to sell a property in order to pay the taxes on it.
Right. And they'd have huge income tax. So the question is, you're really trading income tax for estate tax. Right. And right now the tax rates are pretty close to the same, right? So you'd rather not have, you really, the concern is you want to also get appreciation out of your estate. Right. So you don't want just the current value, you want the future value out of your estate. So now you just do the planning. That's all.